Hey guys, welcome back to the channel McNally Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be switching it up a little bit, and I'm going to be covering 3 mega cap companies that I've recently bought in my personal portfolio. Now these are all blue chip companies, you're probably familiar with them, however we haven't covered them on the channel previously, and in today's video I'm going to give you 3 reasons why I'm so bullish on each one of these companies. Now before we get into it, please take a second, hit the like button you guys, it's a huge help to myself and the channel. If you're not already subscribed, McNally Money, feel free to do so. And let me know in the comment section below if you're currently holding any of these stocks, why you like them compared to some of their competitors, and if you're buying, holding, or selling based on the recent pullback we've seen in the market. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we're going to be switching it up a little bit. We're going to be continuing on with my top 3 trend here like we did with last week's coverage. However, this week we're going to be talking about some mega cap blue chip tech stocks that I've been buying in addition to my regular penny stock portfolio. So on this channel, if you've been watching me for some time, you'll notice that I cover exclusively micro and small cap companies. However, given the macroeconomic environment and the discount that some of these mega caps are trading at right now, they're really hard to ignore, and I wanted to give you guys a little bit of insight as to some of the bigger purchases I've been making in my personal account as it relates to some of these heavy hitting tech stocks. Now we're going to be talking about my top 3 picks here. This is in terms of position size, and then I'll give you 3 reasons why I'm buying each one of these companies. Now in each situation, Microsoft, Apple, and Google or Alphabet, all of the market caps have come down considerably, meaning the PE ratios on these companies are looking very attractive compared to historic averages. In addition to that, these are super well-run companies. They've got a ton of cash on their balance sheet, and they're go-to investments from the Wall Street community. So I'm not going to be talking a lot about the financials or the charts in relation to these companies in today's video, but I'm going to give you 3 kind of unique or different aspects as to why I like these companies compared to some of the other blue chip players. So the first one is Microsoft Corporation. This one I've been aggressively adding to in multiple different portfolios over the last couple of months, primarily in the month of December. You can see Microsoft, this is as of Sunday night, you guys, is now trading at about $225 US, and that's down from a high in December of last year at $336. So it's down about a third or 33% from its all-time highs last year, and that gives Microsoft a market cap in the neighborhood of about $1.7 trillion. Now, the first reason I'm so excited or bullish about Microsoft is their cloud platform, Azure. So Azure is a cloud platform. It's got over 200 products. And when you look at cloud computing, cloud storage, this is a massive growth opportunity for a lot of these blue chip companies. And Microsoft is kind of the silent but deadly approach here. They're taking a ton of market share. It's a huge growth engine for this organization. And I really don't think the investment community in general is giving Microsoft enough credit for the massive growth and success they're seeing in the cloud arena. Now with that being said, there's obviously a ton of benefits for organizations migrating to the cloud, and you can see right now 95% of Fortune 500 companies trust their business to Microsoft's Azure platform. Now this cloud computing and storage ecosystem requires a ton of investment, you guys. You can see they're investing about $1 billion per year in security to protect customers' data alone. So this has high barriers of entry for any small players coming into this realm. And that's really why we've seen a lot of these mega caps move into the cloud computing space or cloud storage. And I think this is really just the beginning, as millions of organizations and individual consumers around the world are starting to shift from on-premise to cloud storage for the storage of their business information. Now, the second reason I really like Microsoft, this actually was a personal experience I had just a month ago. My wife is re-entering the workforce after a couple of years on mat leave. We just bought her a new desktop computer, and as I was in the store, I quickly realized that I had to buy a Microsoft 365 license. You can see there's multiple different plans for business and obviously for personal use as well, whether you're talking about monthly or annual subscription. But the point is here, you guys, this has essentially become a staple for any office, workplace, or most consumers in their everyday life, whether you're talking about students in school, people running their own home office, their business, or just a PC set up in the individual's home. And people essentially, just like electricity or utilities, pay this each and every month or on an annual basis without even thinking. Having access to Excel, Microsoft Word, PowerPoint. These are core applications that kids are growing up with. Everybody knows how to use these features, and Microsoft is receiving recurring annual revenue from each and every one of these millions and millions of customers that have grown up using these products and again are essentially a staple now of everyday life. Now, Google does offer some similar or competitive products like Google Docs and Google Sheets. However, a lot of people really aren't familiar with that ecosystem. It's kind of like the iPhone versus Android debate, and they really stick to what they know, and in a lot of cases, that's the Microsoft Office suite of services. Now, the third reason I really like Microsoft, and another aspect of this company that I feel the investment community isn't giving them enough respect for, is their gaming division. So obviously they've got the Xbox platform, they've got this deal to acquire Activision. It's been stretched out here, you guys. I personally think this deal will go through. This is an article from December 22nd of last year talking about some of the contention that's going on related to this acquisition, but this is essentially being priced out of the stock right now, and if they're able to make this Activision deal go through in combination with their Xbox platform and their existing gaming division, I think this could be a huge growth opportunity, especially as we start to talk about the metaverse and future gaming opportunities. Some of the biggest games in the world, Call of Duty, you can see here, are featured on Activision's network. This is a game that I personally play. There's a ton of in-game purchases, and as people began to get exposed to a lot of this online gaming during the pandemic, I think this is a trend that's here to stay, and I think this could be a huge opportunity for Microsoft moving forward. So those are the three reasons, again, outside of the chart and the traditional analysis, you hear that I'm buying Microsoft, and I'm really excited about this investment opportunity over the next couple of years. Now, mega cap number 2 is none other than Apple Incorporated, again, trading at a significant discount to where it was last year. So again, as of Sunday night, Apple's trading just below $130 US per share, ticker symbol, of course, AAPL on the NASDAQ exchange. And if we look back to December 1st of 2021, you can see they were trading in the range of about $170 to $180 US. So not quite as big a discount as we've seen with some of the other blue chips. Apple is really seen as a bellwether for the entire market. There's a lot of articles right now talking about Apple staying above or dropping below this $2 trillion market cap threshold. But either way, you guys, whether this is the absolute bottom or not, I'm happy to be buying Apple anywhere below $150. This is a company over the last couple of years that's absolutely been rock solid in terms of their financial performance. They have a ton of cash on their books. And in addition to that, 3 reasons I really like Apple are as follows. So number 1, it's almost synonymous with the Apple name, is the iPhone. So this article here talks about the evolution of the iPhone. The first iteration of this product was released on January 9th of 2007. And the reason I wanted to bring up this article, you guys, is because I have personally bought an iPhone each and every year since this product was launched. And I know I'm not alone in that statement. Every single one of my friends every single year purchases the new iPhone. Anytime they break, anytime they're damaged, it's not even a question of switching providers or switching the product. They go back to the store, they buy a brand new iPhone, they rinse and repeat each and every year. And that kind of stickiness in terms of your customer base, when you look at how many people are on this platform, really is truly incredible. Now, the thing with iPhone that I really like is obviously the user experience. It's super simple. I'm super familiar with this platform, and very similar to my comments about the Microsoft Office suite of products, kids have now grown up with these products in their home, whether you're talking about the iPhone, the iPad, or MacBook. I know our son is only 2.5 years old, and he already knows how to operate the iPad and iPhone, whether that's for better or worse. However, when kids grow up with these products, these are going to be lifelong brand relationships. And when you're able to pull out $1,000 to $1,500 from each and every consumer really across the world or the developed world for a product that you launch each and every year, that's truly incredible, and that's a great investment opportunity. And that's really a great segue to this slide here, which talks about my second reason for loving Apple at these current prices. And that, again, is the user experience. It's so easy, you guys. Anytime you want to migrate over, it saves all your passwords. You have the facial recognition. They automatically move all your stuff over to the new iPhone. Their platform is so straightforward, and they make extremely intricate and technical processes seamless to the end user, regardless of their technical ability or their age. So So again, one of the main reasons this company has seen so much success is because it works each and every time. And in the odd event that something goes wrong, which I recently had a personal experience with my MacBook, I called in to their Geek Squad or their support system, and they were actually able to screen share on my computer and remotely walk me through exactly how to fix a problem with virtually no wait time. So again, a major point of differentiation from a lot of these other tech companies that are too big to contact, don't seem to care about the end user, and really don't give that experience that a lot of people are looking for. Now, with that being said, the third reason I love Apple stock right now really is some of the new opportunities on the horizon. So this article here talks about their wearables division, specifically the Apple Watch, which they saw the highest attach rate ever, in excess of 30% in North America in the first half of last year. So this means people that are already on the network or the ecosystem using the iPhone, about 30% of them are now Apple Watch customers as well. And this division of wearables represents an annual revenue opportunity you can see as high as $70 billion. And I think this is really only the surface for Apple or Mac moving forward. I think as we start to move into the metaverse opportunities, there's possibilities in terms of glasses, interactive video game headsets or consoles, and I also think there's a huge opportunity in the medical space as well. Again, people are very strongly aligned with the Apple or Mac brand. A lot of people will simply buy any product that this company puts out, whether you're talking about AirPods, the Apple Watch, the iPhone, MacBook computer. I know our family falls into that category as well. And I think this is going to bode extremely well for Apple as they continue to innovate and develop and launch new products to meet the ever-evolving customer demand as we move into that metaverse or augmented reality future that's on the horizon. Now, Google or Alphabet is my third top pick here in terms of what I've been adding to my personal portfolio in my mega cap or blue chip account. Google really goes without saying here, you guys. This is an amazing company. They're currently trading in the neighborhood of about $90 US, down from the all-time highs we saw in the neighborhood of about $150 13 months ago. So again, trading at about 2/3 or 66% of what we saw only last year, which really is quite a compelling price for me personally. Now, one of the main reasons I love Google is obviously they own YouTube. I'm a creator on YouTube. This is an awesome platform. I think this really is the future of content creation and development on the internet. There's so many people and so many different topics that you can find on YouTube. And I know my family personally now turns to YouTube almost more than we do for Google anytime we're trying to solve a problem, whether that's home repair, we're looking for advice, car tips, recipes, kids books, music, whatever the case is, you guys, YouTube is a beast of a platform, and the way that they've structured it with their monetization and the revenue sharing between creators and the Alphabet or Google organization truly is brilliant and really does incentivize people to come to this platform and create videos and quality content on a regular basis. Now, the second reason I love Google is their search engine platform. This is obviously what made this company famous and really their claim to fame. And what this chart shows here, you guys, is over the last 10 years, worldwide, the search engine market share. And you can see back in February of 2009, Google represented about 90% of the global search engine market. And if you fast forward to December of 2022, they're now sitting at 92.6%. So obviously there are some other players out there, Bing, Yahoo, Baidu, and some other smaller search engines. But the point here is Google has absolutely taken over this space on the internet. And despite countless attempts by various different companies, nobody has come anywhere close to impacting Google's core business. And in fact, Google has actually taken more market share, which is truly incredible to think that 92 out of every 100 searches done each and every day around the world are through this platform. And really what this does, as again we move into the future here, you guys, is gives Google a priceless repository of information in terms of what each and every person or customer around the world is searching for, interested in, or looking to acquire in their daily life. And I think this information, the old adage, information is power, is truly priceless because Google is very actively involved in AI and big data. And as these models become more intelligent, This information and customer profiling is going to be tremendously valuable, not only for marketing opportunities, but for internal Google growth opportunities in the future. And speaking of one of those growth opportunities, again, Google Cloud here goes back to the cloud computing or cloud storage thesis that we talked about with Microsoft. But this is a major component of the organization. They're branching out obviously from YouTube, from search. They're getting new verticals and new revenue streams. And when you look at the Google Cloud platform compared to some of the competitors, not only is it super user friendly, in a lot of situations it's free, like I talked about with Google Drive and Google Docs. That's what I use for all my personal business stuff as well. But there's a ton of opportunities here, whether you're talking about relational databases, virtual machines, data warehouse, artificial intelligence, managed computing, that really appeal to a whole host of corporate or enterprise opportunities. And again, based on the current share price we're seeing from Alphabet or Google, I really don't think are being reflected in this company's share price. Now, obviously, people fear a recession is coming next year. They think companies are going to advertise less, and Google's going to make less money off their advertising streams, which may be true. However, this gives them a great opportunity to focus and invest money and time into some of these other growth opportunities. And I think realistically, whether or not we see a recession this year, next year, or at all, Google's going to come out the other side stronger than ever, as we've seen this organization do year over year and quarter over quarter for the last decade. Now, those are my 3 top picks, again, that I've personally been buying in the month of December and a little bit in November in terms of my blue chip opportunities here. I've also been acquiring some shares of Meta and Nvidia as well. But I think we are really starting to see a great opportunity, really the best we've seen since 2008, in terms of timing to acquire and build your position in some of these world-class organizations. Let me know in the comment section below which of these companies you currently hold, if you're currently adding to any of these positions and why. If you're still watching the video at this point, hopefully you found some value, so make sure you hit the like button. And if you're not currently subscribed to the channel, McNally Money, feel free to do so. That's all for now. Thanks for watching, and we'll see you in the next update.